Welcome back, everyone. Joining us now, right after ringing the opening bell this morning, is Alex Vetter, CEO of Cars.com. Alex, thanks so much for joining us. Congratulations to you. You are here celebrating something big. We are happy to have you celebrating the company's spinoff from Tegna. Now, I'm sure maybe in some senses very excited about this, to trade now as your own company. What excites you about this opportunity?
Well, I think it's a defining day for our company, certainly. It's a defining day for our industry. Having singular focus on our purpose is going to unlock a lot of value for the business and for our shareholders, and it's just an exciting day.
You have, it looks like, is this the app up, Cars.com?
I do. We're the leader in the mobile car shopping space. We've got the #1 app in both Android and iOS environments in terms of most downloads and highest ratings. And it really gives consumers empowerment to make all the important choices around what to buy, where to buy it, how much they should pay, and we're doing it all in a mobile-first world.
Well, you guys don't describe yourself, though, as a digital dealership. Instead, you think of yourselves more of a two-sided marketplace. Can you explain really what the difference between those are?
Sure. There's a lot of people in this industry trying to sort of get in everybody's pocket. And what we try to do is say, look, we want to be a free, transparent, hassle-free marketplace. So we don't get in the middle between buyers and sellers. We just bring them together in an environment. We've got over 20,000 dealers listing their inventory on our website. We've got millions of consumers coming every day to make important decisions about the next car that they're going to own. And we don't try to insert ourselves in the middle of that, trying to lean one way or the other and run a true marketplace model.
And we know your parent company, Tegna, up until just recently here, that was formerly known as Gannett, which many of our viewers, I'm sure, probably are familiar with, up until about 2015 or so. Now, when you were part of Tegna, right, in the most recent earnings report, we did see that the Cars.com benefited from an increase here in advertising sold directly by the company, and then the acquisition of Dealer Rater as well, but then partially offset by declines in fees from advertising sold by newspaper affiliates. And so now that you are a standalone company, right, trading with your own ticker symbol down here on the floor of the New York Stock Exchange, does the strategy shift at all from what you were traditionally doing?
Well, we've always been about empowering consumers to make better decisions, and that'll remain, and that's our core. At the core of our business, consumers are overwhelmed with choices. There's 30 manufacturers producing over 1,000 make, model, trim combinations every year. There's over 44 million used cars being sold in the United States, and there's hundreds of local dealers to choose from. And so that core purpose to help people make better decisions about one of life's most important purchases will always remain the same.
All right, I want to bring in actually a comment from an analyst from FBR Capital, Barton Crockett, saying that he actually sees Cars' flat growth for the first half of 2017 compared to what they were expecting, which is going to be between 3.5% to 6.5% growth. Do you agree with Barton Crockett in terms of what he sees of your overall growth for 2017?
Well, look, it's no secret that the automotive market is hitting its first down cycle in the past 7 years. We've been on an absolute tear as an industry. But the fundamental premise that's missing in terms of where we see opportunity, there's over $30 billion being spent in U.S. automotive advertising. We only collect 2% share of that market, yet conservatively, at least 20% of the population is using Cars.com to decide what to buy and where to buy it. And as automakers and dealers realize that trusted independent marketplaces are where consumers shop, more and more of those dollars are going to shift our way.
Okay, so there's been a question too, whether or not maybe auto sales have reached a peak for years and years, right? Auto sales were the bright spot of the economic recovery, and then now with the proliferation of self-driving cars, there are questions about how the automobile industry adapts and what consumers decide to do from here. How much does your business change? Does it change at all with the proliferation of self-driving cars?
Well, look, our business and our brand is all about empowerment, and we're empowering consumers to make better decisions, but we're also empowering the automotive industry. Most technology companies, they come to this floor and they talk about disrupting local retail. We're proud to be a technology company that's actually enabling local retailers to compete in a digital-first world. We've got over 20,000 dealers subscribing to our service on a monthly basis. We're providing them a very efficient means for acquiring traffic, and that's always going to be our core premise and our core operating model.
Mm-hmm. Well, you said you guys are getting about 2% of that total $30 billion market that's out there. So if you are operating at scale, what are some of the other areas of growth to help you gain a larger market share than just the 2%?
Well, you mentioned Dealer Rater. We're excited about that. The legacy CSI industry is about calling people at home, asking them about their experience, or sending them direct mail. That's not a very mobile or digitally centric world that we all live in today. And we acquired DealerRater because it's able to capture social sentiment at the point of sale or immediately after the test drive. And so consumers are sharing information in real time now. We can thank companies like Uber for teaching us that as soon as you get out of the ride to rate the experience. And we're now bringing mobile technology to dealer lots, and consumers are using our platform while standing on the dealer lot to tell us what they think. And we think we can harness that information, provide data to manufacturers about what's happening with their brands and their businesses, and move the industry at a much faster rate.
Is your data showing that there might be a slowdown in auto sales on the horizon?
Well, actually, our mobile business is growing 15%, so we're bucking the trend of some of the overall secular declines in automotive sales. Part of that, though, is used car sales continues to climb. But I think, the important thing is that we're supporting consumers across all these important decisions. Whether you're buying, selling, or even servicing your car, Cars.com is there to help you make a better decision.
Does Cars right now, do you guys see any more headwinds? I mean, Kristen brought up the self-driving cars, how that's taking off, but any other headwinds that could perhaps slow down the growth of your company?
Well, look, we know that it's a very competitive market, but again, when I step back and look at the way automakers and dealers are currently allocating their media spending, only less than 10% of the population is in the market to buy a car at any given time. You compare that to Cars.com, where 80% of the people on our platform intend to buy a car within 6 months. And if you isolate it just to our mobile audiences, the purchase horizon is less than 40 days. So as car makers and dealers search to be more efficient in potentially a down market, I think we're a great home to drive more efficient sales for them than where a lot of their advertising and marketing dollars are going today.
All right, trading under ticker symbol CARS, and the stock up about 2% today. Alex, thank you for joining us.
Thank you very much.
All right, again, that was Alex Vetter, CEO of Cars.com, after the recent spinoff from Tegna.
Yep, and there's more Cheddar straight ahead, so don't go anywhere. We'll be right back.